Yo, what up, what up, what up, man? This is episode 33 of the Wealthy Sibling Podcast, man. You can listen to us on all platforms, but especially, man, like, share, subscribe so you can get to the video. But shout out to our family, shout out to our Amazon family that continue to push the podcast, and we're gonna keep it going because what we here for? We here to do what? As always, you already know, change our family's money story because who are we? We the ones who decided, made a choice that we were gonna become who? The wealthy sibling. Or the wealthy relative, man, because success for the one who has to do it for their family. Uh, it's not always great, but we do it because we want to do what? Change the family money story. So we're gonna talk about a few things that I already know. When we get to the show, we got to talk about the market. Because if you do not know who I am, this is the first time seeing my show. I am your host, Marcel, known as the Wealth Mentor on Wealthy Sibling, and founder of Griffin Speaks, whose goal is to build and help the movement create 1 million wealthy mentees, right? This is the media arm of that, and to give you aspects of like, what is it about wealth that I wanted to obtain, and from my perspective, and it's mainly from wanting to have a different outcome for my family. And I just so happen to be an actual sibling, right? But I do understand the plight for being a family member and being a successful relative, right? What that looks like, the expectations that whole nine. So I end up living two lives. But we got to talk about the market, right? So enough about that. Beating or betting, matter of fact, I think beating. We want to beat the market, but betting against the market, you could test on your own. Celebrities that are making wealth moves as of now, like the impact of prediction. What does that look like? All right, so you already know, man. We here to talk about wealth, investing, entrepreneurship, the culture, psyche, or the mindset behind money for sure. And make sure if you didn't know, you got to grab a book. You got to grab my book called "The Trade I Made" because it's the walkthrough for the culture on when we finally make that decision, when we finally make that trade from our old life to our new life, it's how we walk in wealth. But the market is on the run right now. I hate to be the person who's uh, negative Nancy on being too optimistic. I'm happy that the market is having to run because that means that I'm able to get profits, right? But I'm also, as a investor who truly pays attention to the whys of the market, why is it on the run? Now, the current stock market environment is being heavily driven by earnings expectations. Shout out to the video that earnings. I told y'all last episode, I've been waiting on earnings. Earnings did play out. Just to give you an insight for those who are thinking about becoming traders and investors, especially if you watch this show. Comes preparation, comes practice, comes confidence. And you're going to have to be confident in your move, right or wrong. So, and I'll tell you why. Earnings for Home Depot played out how I thought it would. Pull back to 290, 289 and some change on the dot in the morning, though. It broke upward after like the first 15-minute mark. So if you're preparing for that, what do? You take what earnings I did have or what I could pull back because of the entry. So that's why I learned the entry is so important. But it gave me another opportunity to I have an official leap. The first was on my page. The first one you've seen is just a really, really long swing. My first official leap, because it's 9 months to a year fathers, they classify leaps in the investing game, is still Home Depot. I believe that my really mine is for still 2027 and first quarter of 2027, but I do believe that Home Depot can get back to at least 390 by first quarter of 2027. For 460, the highest I've seen Home Depot get is 420. Again, always have your exit when you have an entry. But when we talk about like earning expectations, a lot of the market was waiting on NVIDIA earnings to see, okay, is there money fluctuating and still money fluctuating towards AI? Like the benefit, and this is speculation. Oh, let me say this. Full disclosure. Anything you hear me talk about, especially when it comes to finances, I'm not a financial advisor, just a financial advocate, because of what we strive here on the show is to be what? Be our families, be the reason our family's money story changes, right? To become the wealthy sibling, wealthy relative, and the journey that we're on, right? From entrepreneurship to otherwise. But the reason why I say that is NVIDIA's earnings, being the area of the show, tells the story that the world is still invested in AI to the point to where secondhandly, it's justifying the usage of everything that comes with building of the chips, storing of the chips, data centers, and all the other components to it. That the world is still on this path, right? So that's what that is. Reacting to future guidance. Now, consumer strength is a completely different thing for me, because I live in a world where I'm aware, because, and give you a backstory just a bit, I grew up in a world where gas was under $2. I was an adult in a world where gas had never been over like $4.50 for real. As an adult going into my second era, I live in a world where I literally seen gas for diesel, to be Pacific, get to like $6.50, $7. If diesel rises any more, and diesel is what the majority of the trucks run on, if diesel rises any more, that means my regular gas can get almost up to $9. How many meals is $10? To some people, even bruh. So consumer strength for me is a different sentence. But we're still in this world of where will we go with whose worldly decisions will impact the market. Now, I'm going to tell you where I literally am currently in. And actually, let's look at it in real time. So, and you know what I'll do? I'll do this for y'all. I'll do this for y'all. I'm gonna pull this up for y'all on this show. And for those that are listening, I'm pulling up the plays that I have in the brokerage Robinhood. I'm going to read you off the plays, but I'll at least show you on the episode, right? So let's do this. Okay. So what you should be able to see No, not that. Not that. Here we go. All right. So, NVIDIA. Now, this is after hours, so you are looking and you see the candle still moving. It's after hours market. It's an insight for me. It's not a confirmation. So that bell rings for me as an investor, and that hour, the bell, and how the stock candle or the candle stock price moves in the hour, I can sort of gauge where it's going to go and the gaps that it has to fill. So even as of right now, just to give you the insight, my bad. So I got a call in NVIDIA to get to 250. Sounds wild because NVIDIA at right now is at 220, but you got to realize that the gap that has to get filled if it's going to go on an uptrend or a bull run is, what is this? 225. I'm not going to lie to you. I really believe that it's going to shoot past 225 because even today it was at 225. So honestly, I'm reading that wrong because you see, this is why you got to pull back. You got to pull the chart back, y'all. When you're looking at these things, you got to pull the chart back. And depending upon where you want to look, how far you got to go back. So I had to go back to a week to see at what time was it at 2:30, May 18th, 2 days ago. It was at 2:30. So imagine you, and again, here's what you see: higher lows and lower highs, really lower highs. Because on May 14th, let me check, that's a Monday, ain't it? That's a Thursday. Oh, wow. It's later. It's not even a Monday. May 14th was at 240. And this is a 30-minute interval. So, and I'm going to tell you why I'm going to change the time frame. And I was expecting this to be a class, but let's just get into it. We're going to have some fun today. So, the hourly time frame. And I believe this isn't even the open. Let's go back to the open. So let's do 9. I'm on Central Time, y'all, for those that watch the show. So we're on Central Time over here. So I did 9 because the open bell is at 8:30 my time. And by 9, it's on an uptrend going up. And by close, or the bell that my bell closed, is at 2:35. Okay. After hours gets up to 240. And it starts going down. And it's bi-hourly. So still going down. By open bell, it's at 225 the next day. Shoots up about 1 o'clock. It's at 135. It's at a high. If you wasn't watching, now we got to remember, what's the high of the previous day? 236 is the high of the official day. Now, this high is 231. So initially, what actually happened? It really dropped $5. Okay. Is there a confirmation? By the next hour, trading hour, we had 229, $2 more. Okay. New direction, possibly confirmation. If you like, can it go any higher? So from the 14th to the 18th, it's 4 days later, almost a week. The low is 221. This is before earnings. Drop $15. Depending upon the direction that you are trading in. Because I trade options, study futures. And I say that because I've been dedicated to studying futures this year. So I say that with confidence. Candles are candles. Been an investor for 5 years, been trading for 3. Accomplishments that make me credible. I published a book from trading. Hired people to do press runs for me from trading. I've added to my staff from trading. I've gone to InvestFest from trading. Paid for a whole trip. VIP year. From $1,500 for the VIP ticket. From trading. Just saying. That was 2024? Yeah. 2024, 2025, that year. Whatever Shannon Sharp was. I feel like that was 2025. No, that was 2024. You know, so just things I've done, right? But yeah. So with that, but to make the long story short, about speculations that it can get back up to 240, possibly going to run to 260. Either way, I'm cool with it. I got some time. I have enough breathing room because and I'm gonna tell you this. I am a swing trader who is telling you right now. I've fallen in love with leaps specifically. I'm a swing trader, and this trade, this NVIDIA trade, this is cash flow, not wealth building. It's straight cash flow. I can see the move. I say, yeah, I can snipe that. I can snipe that. But the 2 leaps that I'm in, but the 2 longest calls that I'm in are the Home Depot calls. They both go out to 2027. One is for 390, and then one is for 460. 460 is a bit of a stretch unless there's a catalyst for a whole lot of new construction, and Home Depot just blows past 425, which is as high as it's been in as far as I can go back. Let me see. So I might be able to go back for y'all real quick. Because a good thing about Legends is all time. So since 1994, yeah, it's never been higher than 440. Yeah, about 440, something like that. That's what it looks like. Yeah, 430, 440. It's never been higher than that. But you never know with the world. So a lot of people think like, bro, people building gardens. Well, there's 2 main brands that are reputable that people are going to get materials from to build the data centers also, which is Lowe's and Home Depot. So you never know. Somebody got to build the data centers and they got to buy it from somebody. So, so forth and so on. We got sidetracked. Okay. So, let me throw this in there. The next 2 earnings for this week is Tesla, because if I didn't hear anything about Tesla earnings today, so it's this week. Then Salesforce. I don't trade Tesla. Tesla's very volatile, but I have traded Ultra, so I can't say I've never traded something that's extremely volatile. I've made like 700,000 off of Ultra. So I know I'm not mad at nobody who trades high volatility stocks. I'm not even mad at you. They got me. Let me. So that was April. Yesterday probably would have been the best day for you to get in because it pulled back to 390. And at least they get to 460 because it's at 415 right now after hours. But let's get into it. So the top major market impacts is interest rates. Again, people are waiting to see if they're going to get a cut, especially from the new Fed. Everybody that has major money, the major companies, major impact related to the U.S. are concentrating on what are the possibilities of what the new Fed is going to be doing. How you going to be moving this money? And when we request, or may need the money for bailouts, so forth and so on, what you going to be doing? The AI speculation. So market prices, companies like AI will instantly transform into profits, speculation. And here's the truth why I say it. The companies that are going to make you cash flow in these next 6 months vary, right? But what you have to pay attention to is the global economic uncertainty. I'm not going to sugarcoat it with you because I do want you to become a wealthy sibling. With the war, with the Iran war, any other war, still or may not be in speculation. Oil prices, foreign development slowing down, impacting investors' confidence, bro. The global economic impact that is always playing in the back of my mind. Like I hear from my investor bros and in the circles, hey yo, I'm about to do this. QCOM about to do this. Man, Intel might have a comeback on the low. It might be the GameStop move. Yada 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 yada. It's great for cash flow. Great to make you a couple bands. You're brave enough and strategic enough to do it. And I wish you well. I wish you well. Because I want you to make money. But please have the mindset to the reason, and we finna talk about this, the reason why people who had millions of dollars before you had millions of dollars are still working twice as hard instead of talking about how you conserve your money, because they're concerned about how long can my money last if the shit really hit the fan. Like, I'm just gonna say it to you. If it really just hit the fan. And going into that, why are celebrities getting into finance? Now all of a sudden you care about this money? And maybe they've always cared. Maybe they have. Maybe some have. I've heard Busta Rhymes talk about money. I started to hear Taraji, Monique, few reputable celebrities in the culture talk about money. I have. I will say that for sure. But what is appalling to me is how frequently they're talking about, hey, yo, what can I do with my money if something halts the craft that I'm in, if something halts the career? When I say halt, I mean if something stops the cash flow or the money flow of the career and the business that I'm in right now, how can I make this money that I've gained over these 5 years, 10 years, 20-year, 30-year career last? What can I do to be more financially literate, savvy, wise? Now, what I do love about this, because I'm always with that better late than never, is that, and I want you to, everybody, all regular people hear me when I say this. So the celebrities that represent your culture are trying to talk to you as loud as they can. I'm gonna say this again. The celebrities who are representing your culture, who if you look close enough to, they're trying to talk to you as loud as they can to tell you to, hey, be more financially aware of your money because you may not know if there's going to be stability in the next couple coming years. All the celebrities talking about money. People going on tours. People like they really trying to get it. And I want you to enjoy your life, but the market, the workforce job market knows the deadline for your job, right? And if you don't feel secure, be honest with yourself, you don't feel secure, I need you to listen in. So LL Cool J wants you to dream for your money. He's partnered with Dream for Your Money, and he's raising the economic empowerment movement, right? He's getting with the wealth movement. More entertainers and athletes are entering financial literacy, fintech, ownership, and economic empowerment spaces than ever. You got a few hip hop legends and celebrities are no longer satisfied with just endorsements, right? That whole, hey, go give him Mickey D is all that. They're really trying to reposition themselves for the long term. So, and it shocked me when I seen LL Cool J do this because it was I won't say off brand, but I wasn't expecting this. But hey, he with it, I'm with it. Let's get it. So LL Cool J's involvement with the Dream for Money reflects large cultural shift towards teaching about financial responsibility. The truth of the matter is, as a collective and a majority, you're going to have some misnomers. Like I have some supposed successful or well-off or well-managed people in my family, but as a majority, my family is still below the poverty line, below what is considered high class in the economic field, right? They're sitting in middle class if it's still classified as existing now. And that's a majority. Like if you put all my family members together, probably only 10% of them are well off, right? Like, if that. So when we talk about LL Cool J, what does it say? And what is it saying to our people, especially Black celebrities? Like, what is it? Truth of our environments. They became celebrities. They became famous. They reached their dreams. But we all come from the statistic. We all come from, and I'm gonna call it statistic, but we all come from the environment where financial education and ownership and opportunities historically just was limited. That's just, it is what it is. And it was what it was. So after achieving success, a lot of them are trying to close the gap and create platforms to say, you don't need to wait to be the millionaire like me or the thousandaire or get to the NBA to have the mindset of a person who has $1 million. You can have the mindset right now. What the other books that you can go grab is like How I Built the $1 Million Network to put you in places and positions and goals, even in your city, to study wealth. Like I guarantee if you look hard enough, especially even in the culture on every city, I don't care if it's in Indiana. Like if you look hard enough, I guarantee you could probably find Mike Epps linking up with somebody who's trying to move the culture. I guarantee you can find somebody in Kansas City in St. Louis that's trying to link the culture to move wealth in the direction if you look hard enough. But you have to put yourself in those spaces as well. But when we talk about that, here's some of the questions I want to pose to you. Like, why are they entering finances now? Because it's pivotal. What you understand? They're entering finances now because it's more pivotal for you to understand where your money is going, where you're losing money. What did I just say? I just seen a clip of supposedly Nick Cannon, who I've been I'm talking about 20 feet away from Nick Cannon. Nick Cannon walked past me in 3 times out of 5 years that I've been in this space of financial, literally. But this, and he gives a lot of game. He doesn't get the respect of being a mogul either. But literally, I just seen him on Shannon Sharp, and there's speculation that even he fell victim to financial scams and just mishaps that the culture has. Just what I wrote. thing called a trade I made. The culture has to make better financial habits, right? I do believe that this is genuine empowerment because of the basis and the brand that LL Cool J has presented himself in. So I truly believe that there's real merit as to why he backed this, right? Now, I don't believe that entertainers should be the new financial influencers. Are they still a heavy backing? Because the culture will pay attention to NBA YoungBoy talking about money. I'm just being honest with you, before they go listen to Earn Your Leisure. I'm just the younger culture. This is the truth. And I love and respect Earn Your Leisure. Those are my mentors. But if NBA YoungBoy said, hey, I need you to take your check right now and go down there and you open you up a Roth and while you still now, I'm talking about as soon as you can, 15, 14, man, you can pack out your Roth. They would go do it. Unfortunately. So for me with that, I do want you to go into Drink for Money. So and I do want to highlight this just because he done it. Any platform that helps and makes you navigate or lets you navigate the space of financial literacy, easily open up check accounts. There's a few highlights to it. Get your credit builder, like is that. So I really want y'all to look at that. Now, very last thing before we go, prediction markets versus stock market. Because I care about you, I got to be honest. I don't like the prediction markets only because I am afraid of it affecting and rolling into the pot of gambling. Now, prediction market platforms like Polymarket, and this is because Polymarket, and this is so crazy. This was the wildest thing. The prediction market platform like Polymarket has recently partnered with the NASDAQ. Bro, what? It's the wildest thing I've seen. To explore markets tied to private company valuations. Now, it's okay. So I'll give you an example. What does that mean? They're like, bro, I don't know what that means. Okay, here's what it means. There's a company that's owned by Elon called SpaceX. Everybody's saying that SpaceX will be $1 trillion valuation when it IPOs. That's the speculation. What they're saying with these poly markets, which is some of what I don't like, but it's wild. Let's say you are betting the underdog that, hey, I get all the hype, that's cool, but I'm betting $1,000 that it will not IPO accurately at its $1 trillion valuation, even though it's the most sought about company. Even if it's 99.999 billion on its evaluation on paper, if I bet via the poly market or prediction markets that it was not going to evaluate on paper at $1 trillion, and whatever the X is for that, right? Let's say I win. Okay. There's possibilities to this, but it's that whole gambling aspect. But this signals basically is related to this signals a major shift in how people are engaging with financial speculation, forecasting in the future. Instead of traditional stock ownership, users are increasingly participating in predicting outcomes, evaluations, or economic events. Another one is, hey, I got 100 that the gas price is going to go up for the next 3 months. Drop it on the poly market. No, bro, I got 100 that the gas price is going to go down next 3 months. We ain't going to keep going through this war or the impacts of oil prices. Gas prices are going to go down. Is this investing or gambling? What it sound more like? It don't sound how we talk. I ain't said an indicator yet. I ain't said an EMA yet. I ain't said what's the volumes. I ain't said I ain't talking about RSI. I ain't mentioning the Fibonacci. So what it sound like? Okay, then. Our prediction markets the future of finance. I hope not. I don't think so. Now, what I am concerned about is because everybody is still hyped up on Prize Picks, FanDuels. I don't. Hopefully, the younger generation doesn't prefer prediction markets over traditional investing. Not at all. Not if you really want to get your mama out the crib that she been in, improve both of you guys' financial lives. I want you to be in the market. I want you to be investing. That's what I want. And does this democratize finance or increase speculation in the culture is a question that you should probably pose to yourself. For me, if I'm gonna answer that, it leans towards more democratizing finance because now you're bet on that the sky is really blue, or is it really gray, or is it really teal, right? Finance is becoming entertaining. Like I ran across a shorty that I never thought was doing. She was trading Nasdaq on her tablet, bro, while we out here on duty, and I'm just like, shorty. I'm now proud as my sister. I'm very proud. Whenever I see any portion of what I would deem my everyday culture, my people like that you wouldn't think that would be getting into finances in any market, I'm extremely happy that this is happening. Because it's raising the awareness of what we need to be doing with our money. Not the only thing that which would change or shift is how we collectively come with this economy and economics, for sure. But with that, man, I want us to be aware that we're entering an era where prediction may become its own asset class. Hopefully, utilize it to change your lives. But remember, the market rewards discipline. Celebrity culture is shifting towards ownership. Pay attention to that over all the lyrics. And finances is becoming more interactive versus speculation. So these are my last questions before we go. Are you investing or reacting emotionally? Are you building wealth for chasing moments? Do you understand where finances is headed? If you want to invest, wealth conversation, entrepreneurship, and market breakdowns, like, share, subscribe. This your boy, it's Marcel. This is the Wealthy Sibling, man. We appreciate y'all. Shout out to iHeart. Shout out to Amazon Music Podcasting. Shout out to all the platforms you listen to. Shout out to us on YouTube. You already know what it is, man. It's Marcel Griffin. I am the host of the Wealthy Sibling Podcast, man. And we appreciate y'all for sure.